This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that while it may be a pivotal week regarding the US election, we are staying away from that event. There are plenty of other places to get whatever slant suits you. In the coming week, the highlight will be Friday morning's US Fed rate decision. Analysts have penciled in a 25 basis point cut to 4.75%. They won't be the only central bank to review their interest rate settings this week. We'll also get them from Norway, Brazil, Poland and the UK. Plus, of course, Australia tomorrow, where analysts expect no change at 4.35%. Back in the US, there will be important factory order data, more services PMI results, and more sentiment surveys. There was also German data coming up, and in China they'll release their CPI, PPI, and trade data and services PMI results this week. But the big weekend news was the undershoot in the US labour market. The US economy added just 12,000 jobs in October on a seasonally adjusted basis, well below the slightly downward revised 223,000 in September, and forecasts of 113,000. This is the lowest job growth since December 2020 on this basis, and it is this one that sets the narrative. The reasons for the low result are said to be a combination of hurricane effects, they had two, and the ongoing Boeing strike. But regular readers will know that we also look at the actual data in addition to the seasonally adjusted data. Somewhat surprisingly, that rose a very strong 826,000 to 160 million people on company payrolls, the highest ever. That is a gain for the year of 2.1 million jobs. The seasonally adjusted data shows essentially the same on an annual basis. The broader household measure, which includes the unincorporated self-employed, continued its reporting of large shifts away from self-employment and back onto company payrolls. So the overall year-on-year employed gain isn't as large, just under 300,000. Average weekly earnings rose 4% in the year to October, the best since March, and far better than current inflation. In the past 4 years, average weekly earnings rose at a rate of 4.5%. In the prior 4, was just 2.7%. Market reactions to the low headline number suggest they see it as an outlier. Fears were in check, and there seems to be a build-back of the view that the Fed may cut after all at its meeting later this week. The widely watched American ISM manufacturing PMI unexpectedly fell in October from September and came in below forecasts. This survey pointed to another contraction in the manufacturing sector and the worst since July 2023. In contrast, the globally benchmarked S&P market version reported an improvement, although it too still records a contraction, just less so. Some are doing well, but some are finding it tough. North in Canada, there was a factory expansion. A rise in new orders pushed their results to a 20-month high. In China, the Caixin factory PMI turned minorly positive, pretty much confirming the official factory PMI they released earlier. In Australia, CoreLogic reports that Sydney has now followed Melbourne and recorded a month-on-month house price drop. Nationally, prices inched ahead because of continuing gains in Brisbane, Adelaide and Perth. But the pace is slowing everywhere now. Affordability limits seem to have been reached. Meanwhile, there was essentially no growth in home loan activity in Australia in September from August, and for investors these levels slipped. Both recent trends were weaker than expected, especially for first home buyers. And the internationally benchmarked Australian factory PMI reported that their factory sector contraction eased in October, but it still remains in deep contraction. The US Treasury 10-year yield is now just on 4.39% and up 2 basis points from this time Saturday, up 14 basis points in the past week. And we should note that Warren Buffett's Berkshire Hathaway reported its third quarter results over the weekend, and that included its cash pile had grown to $320 billion US. That's 538 billion New Zealand dollars, most of it in short-term US Treasury bills. It has swelled because Buffett is selling equity positions, including in Apple. The price of gold will start today at $2,736 an ounce and down $1 from Saturday, and still well off its high and down $9 from a week ago. Oil prices are holding at $69.50 a barrel in the US, while international Brent price is still at $73.50 a barrel. These levels are about $2.50 lower than a week ago. And the Kiwi dollar starts today at 59.6 US cents and down 10 basis points from this time Saturday. A week ago it was 59.8 US cents, so little changed. Against the Aussie we're unchanged at 90.9 Australian cents. Against the euro we're down 10 basis points at 55 euro cents. That all means our trade-weighted index starts today at just on 68.7, unchanged from Saturday at this time and unchanged from this time last week. And the Bitcoin price starts today at $68,139 and down 2.3% from this time Saturday. A week ago it was $66,267. Volatility over the past 24 hours has been modest at just on plus or minus 1.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.